The Rebel Capitalist Show.
The fact that we currently, well, even more so before 2008, but we had this system set up where the commercial banking system created the majority of the money supply in and outside the United States with the Eurodollar system. But that's a whole other video and topic for conversation. But so if you think and why that's good is because the commercial bank, especially the local regional banks, and I need to give it huge props and a hat tip to Richard Warner, because this is all his idea. Well, I studied his stuff and then just did whiteboard videos on it. This is all, through Richard Warner's research. So, hat tip to Richard for sure. But basically, if you've got the small community banks creating these loans, they're going to do it with individuals who they have a relationship with. So if you've got that entrepreneur that's coming in that's wanting to start X, Y, the bank's going to have that relationship. They're going to know that guy. Maybe they knew him in high school. They're going to know how good of a credit risk he is or she is, and they're going to have a much better grasp of what's going on in the local economy. Therefore, that bank can facilitate good, solid, fundamental growth in that little local area. And then you just have that all around the entire country, and that's how you facilitate lending that creates solid economic growth, and where limited resources are being allocated efficiently, the most efficient way possible. You juxtapose that to what we're talking about now with them eliminating the commercial banks and centralizing everything. Now you're going to have a massive distortion in the economy because these resources won't be allocated, because how can the Fed know, how can they possibly have all the information that all of those community banks would have had on who to give a loan to and who not to give a loan to?
Exactly. And you take that conversation and you multiply it across every other area in the economy and the nation. Mm-hmm. So when I started out, I said everything you've been told is wrong. And a lot of that is because of the way it's been managed. So everything needs to be managed on a local level. So your example is perfectly right. Like this local banker says, hey, this business guy wants to open up this business. Well, that local banker knows, that business is way too saturated. Like you want to open a shipbuilding business in Kansas? No, it's never going to work in Kansas, right? Yeah. So they the banker is responsible for those loans, and we can talk about why the banks aren't lending money out today, right? But there's too much risk. So the banks are kind of on the hook for those loans a little bit, and so they need to also manage that money properly. And on a local level, they can do that. But how can that be done on a national level? But the same can be said about our education system. Same can be said about our healthcare system and all these different things. And so the more centralized power that we continue to have in every area, the more negative effects that we continue to see.
Yeah, that's for sure. And what do you think would happen if the central banks were the only banks, let's say, and print these bank reserves so they can basically give limitless loans and they don't have to be repaid, because they can take, there is no profit and loss with a central bank to the degree that they would go out of business if they're taking a haircut like a normal bank. So do you think we could get into this zone, this really weird space where they're giving out these loans not based on your credit score or your ability to pay them back with interest, but they're doing it more so on things like a social score?
Well, definitely that. And I see it even going even somewhere bigger, deeper, darker, and even more dangerous. And that is, and that is, we're talking about getting rid of the grassroots banks and moving to large commercial banks, and then moving to government central banks. But I believe where this is going is not to government central banks that are sovereign, but moving towards world banks.
Oh, okay.
Right. So that's really where I think this technology is going. And that's why we see the IMF talking about this last weekend, the new Bretton Woods agreement, right? What is the Bretton Woods agreement? That was what put the entire world onto one money system, right? The gold system based off the dollar. And now a new gold standard is like the whole world being back on this. And I think it eventually goes to like the BIS having their SDRs that are basically each country gets a percentage in the SDR, and the SDR is the CBDC.
So that's the new Bretton Woods 2. Instead of the dollar, it's now the SDR.
And for those of us that have been watching this game unfold for 20 plus years, we know that, people have been talking about for years the New World Order and the UN and the one world government, et cetera. But I mean, it's not crazy talk. It's been in development, and that's where it's going. And once we have this CBDC and this new Bretton Woods agreement through the BIS, I mean, that's where it goes. Like, why wouldn't it go there?
Yeah. And I'd also like to remind everyone, too, that back in Bretton Woods 1, Keynes was in favor of something called Bancor. And Bancor was a one world currency. And he was in favor of it because he was thinking through Triffin's paradox. Mm-hmm. And he knew that if there was one country with the world reserve currency, that they would always be kind of in that weird position where do you just create enough currency for your own country and therefore kind of the rest of the world be damned? Or do you create enough money or currency for the rest of the world, which really hollows out your manufacturing base and eventually destroys your own economy and then incentivizes other countries to not use currency, which is just kind of this catch-22, Triffin's Dilemma, Triffin's paradox. So my point is let's just assume for a moment these global elites have good intentions. Maybe that's what they're thinking through, that, oh, Triffin's paradox, we don't want to do that again. So we need to go back to Keynes's idea on Bancor, so that will be the SDR, and we'll just do it digitally, because then everyone across the globe will have to have an account with them, and therefore they'll know and be able to control every single transaction. And, the way they'll probably sell that, Mark, is that because I kind of hear these overtones with their Great Reset videos that I've watched, and the one with the gal from the IMF about the Bretton Woods 2 thing, about how there's all these people across the world that are unbanked, across Africa and Asia and South America, and we need to get these people into the banking system. And they spin it as though this is going to create a booming economy and everything. But that's maybe how they'll sell it. Well, now we'll set up everything at the IMF or the World Bank or who knows where, the centralized location, because we can easily give these people a bank account of their own because they just have to download the app on their phone. What do you think about that?
Well, first off, I would say that being a Bitcoin guy, we've been talking about the unbanked for a long time. There's, per the UN, there's about 2 billion adults in the world without access to banking. But the reason why most people don't have access to banking is because the banking system is permissioned. I have to have permission to join the banking, or I have to fill out all the forms, and they have to hopefully allow me to join it. And that's why the majority of people aren't in the financial system. If you're a 16-year-old kid and you're growing up in Iraq or Iran, for example, you're not allowed to join the financial system. I'm sorry, you're in Iran. You don't get to join, right? And so by them saying it's more inclusion, that's just not going to be the case. The problem isn't they live in some hut in Africa and don't have access to a greenback, and now a digital wallet saves them. That's not the problem. The problem is access and permission. But back to, I guess, what you were just kind of talking about, and actually where we kind of started about how does this play out? And I said that technology now allows this inflation world to exist. So right. How would the IMF or the BIS get these countries to give up their own central bank and join? How would they do that? And it's the same way it's going to work all the way down to the individual person. Maybe I'm thinking this through, but let's say that you're Greece and now you're overextended and now you need to negotiate austerity and you're bankrupt. Well, per the IMF or the BIS, well, hey, you know what? Sorry, you're broke. No bailouts for you. What we will do, though, is we'll take all your debt and we'll give you this brand new currency to use. Next country, oh, you're broke. No bailouts for you. But what we will do is we'll swap, right? We'll swap your debt for this new SDR debt. And they'll just take out each person one by one by one. And I was even thinking on a person-to-person level, when the banks start to fail, let's say that they do roll this up, so we start locally, and the banks start failing, well, FDIC kicks in, right? Well, to get your FDIC money, download the app, right? And that's how you want your money back, download the app. And then I think that just rolls up all the way, whether that's a local bank going bankrupt or it's a government, a country going bankrupt, and like, hey, we'll swap your debt. And I see this game of almost musical chairs where this debt jubilee, where they're just absorbing this debt from these governments, rolling it into the SDR, putting it onto a book somewhere off the shelf, and giving them a fresh new money to use.
Also, too, going back to the putting the local banks out of business or retail banks is negative interest rates, because they drop rates negative, And the retail banks that make money by borrowing short and lending long, they got big problems. I mean, they're not going to be around. We see the problems that they're having in Japan, in Europe with negative interest rates now that are just, let's call it 100 basis points or 50 basis points negative. But goodness gracious, if they did this digital currency and then banned cash and they take rates down to -5 or something, I mean, the banks, unless they're an investment bank, they're not going to last long with that.